Hello, welcome to another video tutorial with Kukura Capital. This is the second episode of our chart analysis series, and in this episode we're going to be discussing how to interpret long shadows or also long wicks on your candles in your Japanese candlestick chart. Now in this particular example we're going to be doing the Euro USD, which is the most traded currency pair in the world, and we're going to be doing it on a 1 hour time frame. Now this is perhaps one of the most important things that you could learn about candlestick analysis, and that's the interpretation of the wicks of your candles. Now the wicks are these lines that you get forming from your candles, and what's great about them is that they're normally an indication of reversals if they cross maybe your Bollinger Bands or your support and resistance or your trend lines. They would be an indication of a transformation or change within your trends. So you must be alert of them, and you have to be able to interpret them correctly. Now I'm just going to focus on a few really distinct ones that are really great examples of this reversal that I'm talking about that you do get with these long wicks. Now in this particular case I'm going to focus on this candle. What you see here is that you have a bearish candle and this long wick that follows it. Now a bearish candle obviously is an indication of the sellers pushing the price lower, but when you see this, it means that the price went all the way to this very point here, 1.05214, and then it pushed back up. The buyers came into the market and pushed this price. They refused, they basically rejected the price remaining at 1.05209 around there. But yeah, it's just depending on what I'm just reading from here. So they rejected that drop and they pushed the price all the way up to 1.05340. So what happens is, this is an indication that the sellers are starting to lose their influence and their power within the market. And this is not the first time that we're seeing this. We're also seeing it here that the sellers tried to drop the price and the buyers came and pushed up the price again. Here we're seeing that the sellers tried to drop. This wick is an indication of the rejection of that price and how far the buyers pushed it up. So it dropped all the way down until about 1.0477, and then the buyers came and pushed it up to 1.05550, and then you have the same thing happening here when the price is pushed all the way down and then it goes up again. So this is an indication here. We're getting 1, 2, 3, 4 confirmations that the sellers in this situation have started to become tired and exhausted. Now that's the important thing about these wicks. They're an indication of exhaustion in the market. When you see and you start to see these formations, these wicks forming, it's normally an indication that there is an exhaustion of either the buyers or the sellers within the market, which is normally a great sign, because it's telling you now that you can expect a reversal within the chart. And as you see, you get a confirmation. Now this reversal takes place here. You go from a relatively downtrend, and then it goes, at this point it turns and it starts to go up, as you can see. Let me draw that properly with an arrow so that people can see what's happening here. So it was going down, but the buyers got tired at this point, and you can see it starts to go up. So it's going down, and then you see it starts to go up for a very long time. So if you were trading, you could enter at this point, because this is clearly a support level. We have done a support and resistance series. That whole series has been uploaded. It's our first complete series, one of these larger series, not our mini series, and you can watch that at our website or on our YouTube channel, Kukura Capital. And you would see this is a support line, and then you'd see this pin reversal indication, and you'd enter the trade, and you can see for yourself there would have been a lot of money to make. So I'm going to show another instance when we get this sharp. Okay, here you also have another pin, and it means the price goes down and then it goes up again, and you can see you now get from a downtrend, you get some strong bullish entries here, but obviously it doesn't last too long here. But you can also see this is also a support and resistance points, but I'll try not to make this too much about support and resistance. I want to find a position, so in that case you would have gone long. I want to show an indication where you have short. Now this is our doji. We will be discussing this in the next episode. Dojis are also perfect indications of when you should also enter a trade, because a doji is almost somewhat of a real strong hint wink that you're gonna get a change in your trends. So I'm gonna look for a position where you could go short. I'm seeing here 2 strong pins as well. I mean, the price goes up and then it's rejected and it goes down. The price goes up and then it's rejected again, and then you do get the start of a downtrend. You get a reversal from this uptrend. But also a good indication is always your support and resistance. This is just a series that's about how to interpret these candlesticks. And in here, I mean, this is another example of your price was going down, got rejected. I mean, this is the larger your wick and the larger and stronger the rejection is, it means the stronger your opposing party is. So in this case, you had a lot of sellers pushing the price down. As you can see, it was going down, and then at this point you have a rejection, a strong rejection, but you have rejection from both sides, so you have to be cautious of that. But you see this really strong rejection and it's at a support point, so it is an indication that you're going to see a change in the trend, which is exactly what happens. So that is a simple explanation of how to interpret the wicks of your candle. The wicks are perhaps the most important part of any candlestick analysis, because where you see a rejection of a continuous trend is normally the indication that you're going to see a reverse in the trend. I mean, for example, here you had a strong downtrend, the sellers were doing pretty well, then at this point you get a rejection of that, it goes down, then it gets rejected and it pushes up, and then for a very long time you see a very strong uptrend. So learning how to interpret your wicks is very important, actually very critical, and it applies to any time frame that you're using, any currency pair. It's a really good way to know, okay, when to enter and when to exit your trades, especially if you're using it with another indicator, either pivot points, Bollinger Bands, or support and resistance lines. So that is our tutorial on how to interpret the wicks of the candlesticks. If you do want more information or have any queries or have any concerns, you can feel free to email us at contact@kakuacapital.co.za, or you can drop us a message on our forum that's available on our website. Thank you for watching. Hope you enjoy the video.